Hey, good morning, everybody. Welcome back. This is episode 5, Bitcoin Curious YouTube channel, podcast. Just me recording myself talking, looking into the tiny camera on my phone. So, we've talked about um, the functions of money. We talked about the properties of money. I spent episode 4 talking about why Bitcoin is a better form of money based on the properties that we talked about earlier. One of those in particular was scarcity and the absolute scarcity associated with Bitcoin. So it's completely finite and defined and immutable supply. I want to talk a little bit more about that, and in particular, debasement. So inflation is getting thrown around a lot. We're experiencing inflation pretty heavily right now in the U.S. economy, but really globally. And politicians will do everything they can to try to tell you that that's about store owners and businesses price gouging, and they're just flat out lying. So what inflation is due to is an increase in the supply of money. And this goes back to really a couple thousand years, or even probably even more than that. I mentioned in one of the earlier videos the glass beads in Africa. Well, that was massive inflation, where Europeans were able to just mass produce glass beads, and so they could go and basically steal all the wealth from the African societies that were using glass beads as money. Even before that, in ancient Rome, the denarius was a gold coin, and the leader of Rome, and you can tell I don't remember a ton about history and all the individual facts, but whoever the leader was at the time, and you can go and read about this, and you'll probably remember it better than I do, but basically confiscated all the minted coins and then reminted gold coins with less gold in them, with more of a gold alloy, with other metals in them. And so that's where the term debasement came from. And that has gone on since then. And basically, the temptation is too great to do it. If you read for politicians to do it, if you read the Bitcoin white paper, you'll see that right in the intro, there's a discussion of all the trust that is involved in the current financial situation, the current financial system, and every financial system that's ever been. It's just the temptation is too great to just inflate and increase the money supply to be able to pay for things that politicians want to pay for. I won't get too political, but certainly war and the American war machine would not be possible if politicians had to convince every American to give up their wealth in order to be able to fund these wars. Makes it a heck of a lot easier when the government can just print the money that is required to fund the war without needing the consent of the governed. And so what that creates when money is just printed out of thin air, when the denominator, the total supply of money, expands, that makes everybody poorer. That means your portion of total gets smaller and smaller and smaller. And that's what inflation is. Inflation is the increase of, in today's terms, dollars, the pool of dollars that are going to be spent on assets. So if the pool of dollars, the denominator gets bigger, then that necessarily is going to cause inflation and make fixed or scarce desirable assets. It's going to increase the value of those. And who does that benefit and who does that hurt? Well, people who own assets benefit from the quote unquote dollar value of those assets going up. So wealthy people benefit from inflation. Whereas people who don't own scarce desirable assets like real estate, like gold, like art, like stocks, etc., they're hurt because now it makes the price of those assets go up, and it makes it even harder for them to be able to purchase and obtain them. Young people are seeing that right now with housing. It's hard to buy a house right now if you're young, and the American dream of owning your own home is slipping through really everybody's fingers, every young person's fingers at this point, and they really don't see how they're going to be able to do it. I got to give a shout out to my mom, by the way, that she joked with me and told me I needed to wear a hat in my next video. It's pretty cool that my mom is watching these. So hat tip to my mom. Thanks for watching, and thanks for the suggestion. This hat is a little faded, by the way. I've put this to good use. I think I've probably had this for about 5 years now, but love this hat. Anyway, so debasement, it's a problem that Bitcoin really was specifically designed to fix, and it does fix that because of its absolutely finite supply. And as I mentioned in the previous video, if you own a piece of the Bitcoin network, you will always own that fraction. So if you have 1 Bitcoin or a 0.1 Bitcoin or 0.01 Bitcoin, that will always be at least the same fraction that it was when you bought it, and it will probably increase in its fraction of total because people will lose their Bitcoins. And we'll talk about that in another subject. But debasement is insidious. It's evil. It makes the poor poorer. It makes everyone poorer, really. But it massively benefits the wealthy because they already own scarce desirable assets, and those scarce desirable assets just increase in nominal value as the supply of money is increased. You can't do that with Bitcoin. So thanks for watching. Thanks for listening. Please share this if you are so inclined. It'd be great if you'd comment and give me a like as well. Maybe for future topics. I've got a whole list of topics that I'm going to talk about, and I'll point you to a whole bunch of Bitcoin related resources soon. But in the meantime, thank you.